Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the Australian dollar at present is holding on to the recent gains as it flirts with the 75-cent handle. From a technical point, the market is still questionable in the recent rebound of continuing, although we could see a challenge of 65 before the initial downturn. But overall, the market is a sell on rallies, and I do expect to see a downturn to look towards a target of 73.75 as an objective. Now, yesterday in Australia was the latest employment report, as it revealed that the Australian economy added 22,600 new jobs during the month of April, which was up from a small contraction in the number of new jobs created back in March, which was at negative 0.7, which, however, looking at the forecast, was ahead of its target of 19,500. However, on the flip side, the unemployment rate came in slightly disappointing as it notches up from 5.5% to 5.6%. But as I mentioned, I'm looking to sell rallies because the technical implications do support a rejection from anywhere above 75.5, and I'm looking down. Well, the euro briefly looked underneath this 118 handle overnight and found a base short term from 117.75. Before we look into the top side, is that the market overnight came to the Philadelphia Fed release. Its manufacturing index rose by a reading of 34.4 from 23.2 in May, and that was the highest reading since 1973. Now, for some of you that don't know, the index is a leading indicator of economic health. Usually, businesses react quickly to market conditions and changes their sentiment, which can be an early signal of future economic activities such as spending, hiring, and investment. The technical layout for the euro, as I mentioned, still looks relatively negative. And if the dollar index can continue on after posting a 6-month high overnight of 93.49, then we should see the index push on towards 94 with the objective being 95. This would in turn see the euro tumble heavily towards the objective I'm holding now of 116.6065. Resistance on the day is seen at 118.50. Well, the dollar yen is still pushing higher and now very much only a stone's throw away from its objective of 111.25 after clearing the resistance overnight of 110.45.55. With the US Treasuries climbing to a near 7-year high of 3.12 has boosted the US dollar. Also to note is that the US and China have resumed talks over the trade wars, and the latest update reveals that China does not want to escalate in the trade wars conflict. So we'll have to see where that ends. Now, I do expect to see some profit taking from 111.25 because we are overbought. So therefore, could see a pullback to 110.35 eventually, with the uptrend now seen at 109.70.90. It has pretty much been an uneventful week for the pound, as it continues to maintain above the 134.45.65 level and hasn't made any significant moves in the last few days. With a couple of dojis inside there, you can see the market is still poised for a further test up, I believe. This week we did see the market look to the British jobs numbers, and the British UK employment figures came out slightly better than expected, with an employment rising by 197,000 during the first 3 months, which is the most significant jump we've seen since 2015, and far exceeded the 130,000 forecast. Policymakers at the Bank of England will now have to decide what to make of the mixed readings, as the employment market and wage growth will essentially be factors in the Bank of England's thought process over rate hikes, which I believe will be in June, of a 25 basis point move. So looking at the market, I do expect to see a further test up away from 134.45.65 and look towards a region of 136. Well, the gold is getting a little bit concerning, although it did bounce from 1,000 to 1,284, is if we get further weakness, we could be looking down towards 78. Now, there is a base highlighted here at 1,255. If we can get a close above 1,300 At the end of this week, that would be bullish, and we could see a further $30 rise. If not, then we could see further weakness and look towards the suggested targets I just given. But we are oversold, so therefore dips are likely to be still a way to go to buy and see a rebound. Well, since the rebound of $16.15 in silver, I still like to see the market higher, with the first resistance seen at 55. A break above there would give further scope up towards 85. I'm not as negative on silver as to gold, but nevertheless the patterns are still pretty much looking for a test up, and any dips should be a buy towards 25 with a basis 15. Well, oil did take a challenge to the upside and briefly looked above $72 a barrel, but found the market got a little bit heavy up there in terms of selling. With the doji coming back in play, the oil has slipped back underneath the level of 72 and is now coasting around 71.5. I feel this is a good projection from the previous day that we saw, so therefore I'm looking for a test down towards an objective at this stage of $70 to 68, with any rises still to fail. So that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday reports, and I hope you enjoy the rest of the day and a great start to the new weekend.